Coming up today, stocks stage a massive rebound as fears are still elevated. What caused the sharp bounce? Google overtakes Microsoft. Did Bitcoin just hit a bottom? And the number one signal that just flashed today. This is massive, guys. Let's go. What a turnaround. Wowee. Bearish to bullish flip, monster rip, bounce reversal and rally across a lot of risk on assets today. Small caps, plus many other assets showing some big hammer candles, potential reversals, and the bears that have been out of hibernation of late are pretty quiet today. I was getting some hilarious comments on my video yesterday. Big shout out to all those guys. And how quickly sentiment can change, especially coming from extreme levels. S&P 500 added on more than $700 billion in market cap today. More importantly, we're seeing some great signs of breadth with very bullish looking candles on a lot of charts today. The equal weight S&P 500 as it was OPEX today, the third Friday of the month option expiry. Normally a pretty subdued day actually, especially what we've been seeing this year, but that was anything but today. So good to see the broad-based indices actually outperforming the main headline indices with the Russell 2000 small cap index, the clear leader, up 2.8% today. And a sharp reversal from yesterday's price action. Does that mean the AI boom's now back on? So many people basing their opinion on one day's price action. But there has been a massive momentum unwind. Huge liquidation of funds and traders across the board. A massive shakeout. A massive fake out yesterday, which in my opinion is now a massive opportunity. I suspect a monster bounce is coming. And stick with me today because I'll tell you later on this video what I just bought the dip on today for a swing trade. And I think this could actually quadruple in price in the next month. And I'll also show you the number one signal that is added to my conviction to put this trade on today just before close. I'm going to give you my entire bullish thesis and what I'm looking for to decide when to sell and close the trade. I think you'll find that really interesting. But first off, as usual, let's step back and take a look at the 10,000 foot view of the markets, of the economy, what the data is telling us, and I'll let you decide what to make of all this. Funny enough, even after today's strong bounce, we've still got extreme fear readings all across the place, with the bears really sounding off this week, some even declaring victory from traders, institutions, and financial media alike. Many people out there convinced the stock market's peaked. We're now at the start of a big downturn. AI bubble, AI bubble, AI bubble. Biggest topic across global finance at the moment. What to buy instead? AI stocks are done, right? Nvidia growing at 65%. It's all an illusion. It's just one big circle jerk. Jensen's faking the numbers, as someone told me yesterday. AI stocks selling off after Nvidia's earnings. Clear sign the bubble has burst. Also, they say. Millions of people talking about and searching for AI bubble means that it's definitely over. The crowd's always right. And that's actually convinced a lot of people to get out of the market and even bet on markets falling. Seen a massive spike in inflows in bearish tech funds. We even saw a near record amount of put option traded in the market yesterday. Looking back in history, that's generally a bullish signal. When we get a similar level of puts traded, the market has always bounced a month later. But Jim Cramer's convinced we need a further washout. And no doubt, bottoms are often quite messy. Can take some time to form, can be some retests, consolidation. That's what normally sets up for a double bottom bullish divergence, as it's never easy. And I agree with Jensen Huang. They came through with a 65% earnings growth, guided up for next quarter, said they can't sell enough GPUs. Can you imagine if they missed on their numbers and guided down, even if they were just having a soft quarter? He said if they were off just by a hair, if it just looked a little bit creaky, the whole world would have fallen apart. People are so sensitive to the whole AI growth narrative. I think a lot of people actually living in denial about it. They want it to fail. Surely it can't keep going up. But maybe this is another DeepSeek moment like we saw at the start of the year. Chinese AI. Millions of people were convinced American tech was done. The Chinese have already taken the lead. It was later found out DeepSeek actually trained their own models on ChatGPT with NVIDIA GPUs they'd gotten via Singapore. But like the late and great Charlie Munger says, he saw his favorite stock Berkshire decline by 50% 3 times and he wasn't bothered about it. Volatility is part of the game. Just stay calm and don't make decisions and panic. But that's the funny thing about the stock market. Your favorite stock drops by 30%, a lot of people panic. But when your favorite brand drops by 30% for a Black Friday sale, you celebrate. Same discount, different psychology. And this is why a lot of people lose in the market. They treat assets like liabilities and liabilities like assets. But the best thing you can do is own every trade you take. Don't ever say things to yourself like, I should have done this, I should have done that, I should have sold more at the top. Just accept it. Learn from the past. It's okay to make mistakes and take losses. That's part of trading. You'll never buy the bottom tick and you'll never sell the top tick. And drawdowns are unavoidable. It's how you handle them that matters. Just like in life, anybody can handle winning. It's how you handle losing that defines your character. So what did give us a sharp bounce today? I think it was a couple of things. In addition to being at peak fears, which technically speaking, we can get strong bounces off, we may have got a little bit of a Trump put option, trying to help out his new buddy Jensen Huang, hinting to the market about potentially allowing Nvidia to send its powerful H200 AI chips to China. Big market, which if it goes through, could easily add another $5 billion or more in positive cash flow per month for Nvidia, which did stabilize Nvidia's year's price finishing nearing flat after being sold off earlier in the day. Getting a little pop here after hours as I look, but more importantly for the market, here in the short term at least, is the expected path of interest rates, with some Fed members pushing back of a few pessimists at the Fed who don't want to cut, some even actually trying to talk down the economy and markets, unfortunately. The Fed's Williams sees scopes for a near-term rate cut, as does a few of his colleagues, looking to bring the cost of capital down further, especially as we're still kind of in the midst of an economic data blackout. The government being shut down for 43 days is having some ripple effects with the release of important economic reports that the Fed typically uses as inputs for their decisions, even though the data can be sourced elsewhere, which is actually more accurate real time than what traditional government agencies report. Not only are we not getting the October jobs report, but also the next most important data print, CPI inflation. And in fact, the November print won't come in until after the Fed meet on December 18, 1 week before Christmas. Fed set to meet and release their decision on the 10th, which used in history as a guide, they should err on the side of caution and just go ahead with a cut, because looking at real-time inflation in the economy by Truflation, which uses 10 million plus prices from across the economy, looking at thousands of websites, inflation's tracking at 2.4%, which is very much in an acceptable range to go ahead with another cut, especially with the labor market on edge, even though we did just see a good bounce for September numbers. That's now 2 months away. And so we saw a huge flip in interest rate pricing for next month, almost going the exact opposite from yesterday. Now 70% chance we're going to see a cut next month, showing how sensitive the market's been for this next decision. And we can see that huge flip in the odds on Polymarket. Yesterday, price in 64% chance we weren't going to get a cut. 34 we were. Here we are now, like I said, almost a completely symmetrical flip, 65% chance we will get a cut. And so maybe just bullish seasonality plays out like we can often see. It's a pattern I first recognized back in 2006. I remember studying it. Whenever the market has been having a great year, a lot of momentum coming into November. And then if we see technically oversold conditions in the month of November, they can often present a good buy the dip opportunity, because December and January can end up being great months. And so we do have the ingredients for that there. And even though nobody knows for sure what's going to happen next, we're just going to play the cards in front of us. I think the fundamental backdrop is great. I think all this pessimism and fear and doomerism about the AI bubble just adds fuel to the fire for what's possible next year. I think a lot of people still misunderstanding and underestimating what this new US admin is doing to unlock the US economy and markets. Nobody's talking about potential 5% GDP growth in America, but we're actually trending towards that. Along with stimulus and lower rates, it's pretty hard to bet against that. And I, for one, don't want to have any money just sitting idle in cash, collecting dust. I'd rather put it to work and stomach the volatility. And if all of that makes sense to you, well, then now's your opportunity to not only buy the dip in markets, but also on a premium Click Capital service. Click the link below this video, head on over to my site, clickcapital.io, and use the promo code BTFD, buy the friggin' dip 30 at checkout, and lock in a permanent 30% discount. And you can follow my weekly stock picks. All my services, I put my money where my mouth is, which you won't find any other FinTuber do the same thing. They're all just selling you crap that they don't even use themselves. But in addition to my stock, ETF, and options portfolio, I share all real trades I'm making with my members. In addition to my 30 premium trading view indicators you see me use on these videos every day, which I've personally developed over the last 10 years, you can also use this promo code to get all of my indicators for a one-time fee in a lifetime package. And that includes any future indicators I develop. I usually come out with a few new ones each year. And again, you won't find these anywhere else on the web, and they've helped me and hundreds of other traders all around the world achieve better results in the market. I don't really use any free indicators anymore. And just to give you an example of how I've used my custom indicators to help me identify profitable opportunities, one of the biggest winners for me this year that I shared many times with my regular viewers was Alphabet Google back in April and May. And if you look down here next to the stock fair value indicator number, as I hover over the price action back then, you can see my stock fair value indicator, which uses a number of inputs, estimated forward earnings, the balance sheet, and a few other things to come up with a fair value on every stock in the world. Doesn't matter if it's an American stock, Australian, European, UK, Singapore, wherever you are, this indicator works on every stock around the world. You can see it was telling me the fair value for Google back then was about $168 a share, and that's a conservative estimate because I believe Alphabet Google, given its strengths, should always trade at 20 to 30% premium where it does now. But back then the price of the stock was trading around 150, even getting down to the 140s, and in the peak of the lows, almost hitting the 130s. And so that's one of my fundamental indicators, very popular amongst my clients. Another one that I developed this year, the dark pool percentage indicator, looks at a few things to estimate the level of buying in dark pools. A lot of volume is done off exchanges these days. And on this day back here on the 7th of May, news came out that Apple was thinking about getting rid of Google search off their devices. But not only was the stock significantly undervalued, fundamentally speaking, and underappreciating the huge potential and leadership in AI Alphabet Google was already shown back then, but also I could see in my technical indicators there was accumulation going on underneath the surface. One of the biggest dark pool buying days of the year was the 7th of May, along with the clustering, which you want to look out for, of dark pool buying was occurring back then. And again, the stock, which turned out to be a great time to buy the dip like I did, because the stock has since doubled since then, making me a healthy profit. And so again, you can get lifetime access to all of these unique custom indicators you won't find anywhere else by clicking the link below this video and using promo code BTFD30 at checkout. And you can combine multiple services in a package deal for even bigger savings. And speaking of Google, it was great to see them just overtake Microsoft in market cap today. With another big headline, they must double their AI serving capacity every 6 months to meet demand, which is just absolutely off the chart. Like I've been saying with Nvidia, they don't have a supply problem, but rather a demand problem. That's actually the case across the whole industry. A lot of bears say it's really just Nvidia carrying this whole AI boom. Everyone else is suffering, they're all going to lose money, it's all just an illusion, but they can't build all this stuff quick enough. The world is turning to AI, regardless of 1 day or 1 month price action. We've seen volatility this entire secular bull market. No doubt this won't be the last time either. But in addition to Gemini 3 getting a huge response across the techverse, so is their latest Nano Banana Pro AI image editing tool, which is going to unlock further massive productivity gains across every industry, allowing all of us to have new skills, not just easily acquire knowledge and reason with a chatbot, which is basically an expert in every domain, but also you can use it to do stuff, interior design, architecture, and not just us outside of these industries, but also professionals in these industries. It's going to allow them to do a lot more for a lot less. So I believe AI is unlocking even bigger productivity gains than the internet. And just like I suspected all year, Alphabet Google's in the best position to monetize all of this. They already have the most dominant digital advertising infrastructure, millions of advertisers, over 3 billion consumers using their product. Now they're just starting to roll out ads in AI mode, further unlock new revenue stream, creating super realistic images. Can't even tell if they're real or not, like the one I showed at the start of this video with tech CEOs all standing around the same room. And so the market's finally woken up to that and starting to see all that's hidden underneath the surface of Alphabet Google. Long time people just thought it's just a search engine. So much more going on than just search, including their TPU chips with actually the best scoring AI chatbot that doesn't rely on NVIDIA GPU, not to mention currently leading on robo-taxis. And some people still believe in the efficient market hypothesis, EMT, which for the most part markets are pretty efficient, but not all the time. There are temporary dislocation, mispricings, and opportunities. As long as humans buy and sell stocks, the crowd will always get too carried away in the short term. Not even 6 months ago, Alphabet Google was trading on a market cap 1.9 trillion. Kind of hard to believe now. Quickly catched up and just overtaken Microsoft, 3.5 trillion. Next up, Apple. And who knows, maybe they overtake Nvidia next year. That wouldn't surprise me. Even here in the short term, the chart looks super strong, printing these massive volumes even at the highs. Looks like the stock could potentially go vertical as everybody's getting bullish on it now. After so many people were writing it off at $150 a share, saying GPT is eating their lunch, Apple's getting rid of them, even Turkish regulators coming after them, spooked the market back in June. But that's why we pay attention to the fundamentals around. Most other FinTubers are too lazy to do that. They just look at nothing but the charts and other BS like option call and put walls, which are completely irrelevant, nobody makes any money with, because they don't want to try and understand the key driving factors behind a stock and the market at large as well. But it's when you combine the fundamentals and technicals that you can discover amazing opportunities in the market, like I did with Alphabet Google earlier this year. But just moving on, looking at the biggest driver of stocks, which is how much money they make. Pretty much wrapping up Q3 earnings season. Current revenue growth rate for the S&P 500 in Q3 is 8.4%, which will mark the highest revenue growth rate reported by the index since Q3 2022, 3 years ago. And that has been steadily climbing all year, and in fact, even accelerated these last couple of months, as it has been doing around the world, not just in America. And that's why we've got a global equity bull market going. In addition to the Fed just saying the US economy is currently growing at an annualized rate of 4.2%, why isn't that more of a mainstream story? The US economy growing at 4%, it's kind of pushed to the side and buried with big shadows and doubt cast over it. What happens if it goes up above 5%? Will the market and the media be able to ignore that? We're on track for a record holiday spending period. Is that all just fake as well? American workers' growth in their earnings still a full percentage point above that of inflation. this year. Average annual hourly earnings up 3.79%. Plus, we haven't even really gotten into the next wave of AI, physical AI, robotics. Hard to think it was only a couple of years ago that Elon Musk and Tesla were mocked over Optimist bot and being completely delusional, they said. After they had a human in the Optimist bot suit come out and do a dance, a lot of people said it was a joke. Here we are just a few short years later, and we've got Optimist bots handing out candy in Times Square, serving up popcorn at Tesla diners, already capable of doing things in the real world. And you look at how far even chatbots have come. Just this year with Gemini. GPT's only a couple of years old, but apparently the bubble's already burst. It's over. It's done. Nothing to see here. But as we've seen time and time again, those who doubt Elon Musk usually end up being wrong and losing quite a lot of money, like all the Tesla bears. Some of them still hanging around thinking their day's going to come. And it's not just AI stocks, tech stocks, but also closely related crypto, even though I think we've got the most bullish fundamentals for crypto ever. For years and years, the US government was fighting it, trying to shut it down, suing founders, hunting them down, locking them up. Now we've got a US government determined to make America the crypto leader of the world, strongly getting behind it. Deregulation, which if you know anything about history, really unlocks industries and wealth. Governments can be the biggest barrier and also the biggest tailwind to entire industry. That's why we follow them so closely. But again, pessimism and fears are at extremes. I would say even more so in crypto than AI stocks at the moment. Looking at the crypto fear and greed index, it's just hit a record for how long it's been in the extreme fear zone, which just like stocks is typically associated with bottoms. But like I said, they can be a little messy. Take a few weeks, even a month or two to form. Markets are never easy. But we're seeing all the signs of a potential bottom being formed. Elevated fear, a huge amount of outflows on crypto funds, massive liquidations across the board. On some measures, we've never seen more short-term traders and leveraged traders getting completely wiped out than what we've seen this week in crypto. And I suspect a few sizable funds as well getting margin called, forced to sell, which just adds to it. But today was a record in volume for Bitcoin ETFs, and we typically see big volume at market turning points, especially bottoms instead of tops. Tops are more broad-based. Distribution typically takes longer, much harder to identify. But bottoms tend to happen more quickly, tend to see more V-shaped bottoms than V-shaped tops. And what I alluded to at the start of this video, the number one signal of all time. And of course, we like to play on him as a bit of a joke around here, but he does have a pretty disastrous track record when it comes to these things. And that was Jim Cramer on CNBC today getting bearish, saying everything is not fine with Bitcoin, people need to get out. But Jim Cramer is representative of mainstream sentiment because he's stuck in the middle of it. And so technically speaking, we got a nice hammer candle today here on Bitcoin, and now just printing the fourth bullish reversal signal. You can see on these green arrows here on the chart, and this is one of my most popular and accurate indicators. Just like it gave indication of the top back earlier in October, it does a great job at showing when moves can be exhausted. Along with my DSI indicator, which is an improvement on the RSI. It dynamically adjusts to each asset based on historical patterns. Currently showing -17, which is actually very low. Which to see a similar level, we have to go all the way back, even past 2024, all the way to August 2023, when Bitcoin was trading around $25,000 a coin. Again, it took a month or so for the bottom to form, but it was the bottom. And similar setup for Ethereum. Looking at my DSI, very technically oversold, and we haven't been at a similar level since actually back in the tariff tantrum, April this year. So we've been seeing some huge swings and volatility in crypto, which definitely has caught a lot of people by surprise given the fundamental backdrop. But since a lot of the market's so leveraged, they're being forced out of it, whether they like it or not. And even people that can see the opportunity simply don't have the dry powder to buy it, or they're too scared to. They're so caught up in all the headline and the short-term price action. But in my opinion, the macro could not be any better for crypto. Sentiment could not be any worse. History loves this mismatch. And I think we're getting a delayed reaction in crypto after the big repricing in rates today. We certainly saw other rate-sensitive sectors react to this. Retail finding support up 3.5% today. Home builders having a big pop, 4.6%. Regional banks as well, 3.4%. And so in my opinion, I think today was a great day to buy the dip in crypto. Like I said, I'm not saying for sure it's bottom. You don't need to at me if it goes down on Monday, because the bottom could take a few weeks to form, but we could also get a powerful V-shaped recovery. I am seeing the fundamental and technical setup there for it. And so I've played this in a few ways. I put on a bullish options trade in the Bitcoin Trust ETF today, IBIT, along with a 2x Ethereum ETF, ETH, both of which I shared with my options trading members in our chat room today. I always post real-time trades in the last hour of every US trading session, straight from my brokerage account. But another trade I took in my personal long-term account that I'm actually treating as a swing trade is that of MicroStrategy. In addition to the sell-off in crypto, There's also been fears that they're going to be cut from the main indices, like MSCI, as they've proposed cutting digital asset treasury companies, which no doubt if happens will put short-term pressure on the stock, but it doesn't change the amount of Bitcoin that they own, and it may not go through after all anyway. More important to me is its current valuation relative to its Bitcoin, even looking at its net asset value, taking debt into account. This chart's a day old, and the stock went down further today, so it's currently trading right around its net asset value, which looking back in history, it was in the depths of the bear market of 2022 and only briefly went below before actually staging a big rebound, getting back up to 1.7 times its net asset value. And no doubt, as markets often do, it got far too carried away late last year, getting above 3.5 times its net asset value. And that's why I was speaking against it a lot, as it was ridiculous. Like my regular viewers will remember, but it did print that massive bearish engulfing candle, topping out at $543 a share, as it was trading at multiples of the Bitcoin held on its balance sheet. But from those peaks, the stock has fallen almost 70% as of today's low. And so fundamentally, it's trading right around net asset value. In the current extreme fear of the crypto market, and again, looking on my DSI indicator, it is deeply oversold, -18. In fact, we have to go all the way back to May 2022 to find a similar level. The stock was trading around $15 a share. In addition to signs of accumulation showing up on my dark pool percentage indicator as well, we're getting a clustering of big green days here, showing that smart money underneath the surface appears to be accumulating into these lows. And so I believe MicroStrategy has set up for a great dip buy opportunity, of course, for those that can stomach short-term volatility, because it's not just going to go straight up every day. And this is something I identified last week as well, and hence already put on a bullish option position. But I took it a step further today and opened up a long position just before the close in the MicroStrategy 2x leveraged ETF in my personal account. And even though I'm not a huge fan of leveraged ETFs, definitely not as an investment, as they decay over time. For example, if MicroStrategy went sideways for a year or two, this ETF would actually lose value. But for a swing trade, they're great because I don't use margin, but this is my preferred way to get high torque exposure towards really crypto, as you could think of MicroStrategy and especially the 2x leverage ETF as a very high beta play on crypto. And so with this long trade, my goal is to hold it for a month or 2 or 3. Don't really want to hold it longer than 3 months, and ideally sell it into technical strength. Maybe when greed comes back, the DSI goes into overbought levels, or the MNAV, net asset value, goes back to 20-30% or more, or the headlines get really bullish, or any other indication to me that it may be technically overbought, along with the fundamentals as well. And so like every trade and investment I make, it's risk defined. Like I said, I don't trade on margin. I very rarely will trade these leveraged ETFs, but I believe today was a great opportunity to do so. And that opportunity may still exist next week as well. Like I said, bottoms can be messy and take a little time to form. But overall, we did see some positive signs in the market today, along with the crush and volatility. Yields pulling back a bit on increased chances of a Fed rate cut next month, plus super strong price action and reversal today. After yesterday's big sell-off and the bears all out there celebrating, we've completely flipped here today, getting a momentum upward thrust signal here in my charts, another one of my custom indicators, which is now your opportunity to get lifetime access to them all for a one-time price and save 30% using promo code BTFD30 at checkout. Along with getting access to my stock picks, ETF and options portfolios, this is a great opportunity to jump on board now and don't miss out on potentially the next huge leg of the AI and soon-to-be robotics boom, for which my portfolios are positioned to profit from. You won't find anybody else doing this stuff, and so if you want to join a community of real traders making real trades every day, then click the link below this video, head on over to my website, click capital.io and use the promo code BTFD30 at checkout and lock in your 30% discount today. And that's a wrap for the daily market review this week. Just a quick heads up, I'll be taking Monday off to take care of some other business, but I'll be back in force come Tuesday night. And a huge thanks to everybody who's already jumped on this Cyber Week sale. I'm super excited to get started with you all and getting ready for a monster 2026. My name's Jared, and I'll see you back here again come Tuesday night.